My guest today is Cecilie Skjong, investment manager at Skyfall Ventures, one of the leading early-stage VC firms in the Nordics. Cecilie invests in ambitious technology companies at the earliest stage and works closely with founders on strategy, growth, and fundraising. Before joining Skyfall, she worked at McKinsey and at Aize, giving her hands-on experience from both strategy consulting and building technology companies. Cecilie, great to have you on the podcast.
Thanks a lot for inviting me.
Of course, we know each other a little bit. I've seen you on stage a couple of times, spoken with you a few times, and you might. I haven't been on the other side of the table of you in a negotiation, but so you might be different there. But you seem like one of the nicest people I have met in a very long time.
Well, that's good to hear. I feel like we have this sort of mindset as well internally that we need to be very open for new ideas and new people. So I think that really helps with my personality, that I'm very open for meeting new people and hearing about new ideas.
That's good. It shines through. So Cecilie, I asked you for this episode to give your predictions for 2026 because we're recording now in the end of 25. So the first question I gave to you in advance was if you had to make 3 to 5 clear predictions for the Nordic VC and startup landscape in 2026, what would they be? And I don't know your answers in advance. So as I was telling you before we started the recording, I'm very curious to hear, how you see the landscape going or where you see it going.
Yes, this is always it's a huge question. And of course, I'm not a person who can predict the future necessarily, but of course we see some signs that helps us sort of see where at least we're heading towards. I think sort of three sort of themes on the investment side first, and then some sort of thoughts around the VC landscape as well. On the investment theme side, I sort of see 3 continuing trends. One being AI, another one being dual use, and a third one being energy tech or climate tech. So I think on the AI side, of course, that's a huge wave happening as of now. I think 2025 has been the year of agents, really seeing how you can move from having sort of knowledge at your fingertips with ChatGPT and other solutions towards moving towards sort of having agents do work for you. But I think we'll sort of see the next step in this path with more agent-to-agent interaction. That will really sort of change a lot of sort of how we can operate as both individuals and as companies. And of course, around this sort of space, there will be a lot of new solutions coming, both on, of course, the sort of agent space, but I think also on the infrastructure side, on security level, on payment rails, etc., that I think is super, super interesting. So that's a space that I'm just foreseeing will really boom in the coming year. And I think it's in the AI space, I just feel like it's almost impossible to see sort of 10 years ahead where we're moving, but I'm just really bullish on the long-term opportunities in the domain. And then an example from our portfolio, we invested in a company called ParaHelp some years back. It's a Danish company, so from your home country, so I wanted to pull it forward. They're doing agents for customer support, and today already solving, as an example, 70% of Cursor's support tickets. So like you're really seeing not necessarily only sort of the boom around this and sort of the interest, but it's also actually providing tangible effects. And I think when you start sort of seeing more agent interaction as well, the opportunity and the impact will just further accelerate. So that's my sort of first prediction, which I think is not necessarily like I think many people sort of have a thought around AI for the next year to come, but I'm just really bullish on the space.
Can I just ask you about that, Cecilie? Because as things change so quickly right now, especially around AI, as an investor, how do you think about that, or how do you try to, like, at least as a user, put it another way, you're trying to find good AI solutions to solve our problems. And then once we find something that's good enough, or that works really well, and I'm deciding whether we should implement it across our entire company, I also have to consider, okay, let's say we do this, and then in 5 months, a better tool comes out. Okay, do I then have to change that and all the change management that goes with that? And I wonder, as an investor, like, what are the considerations you have to do when things change so fast?
It's a very good point, I think. But I think also sort of early stage investing, we invest at a very early stage. So pre-seed seed, we can invest already at a stage where sort of there's only a team established and some initial validation. And I think sort of it all always comes back to the team. So in a way, like, of course, everything around can change. But at the same time, the team that develops and build the company, they're the one we're investing in. So I think it's a discussion about sort of this team's ability to really sort of move at an extreme pace and have the right skill set to do so. And then the market around will change, but if it's the right team, hopefully they will be able to adapt. And of course, in addition, we're always looking at sort of the market sizing and the why now, and so of course also sort of seeing if they're able to build defensibility into their product. So we have all these other factors as well. But I tend to say, like, when we discuss an investment opportunity internally, we always start discussing the team, and then we sort of move around in a circle discussing all other elements. And we always come back to the team at the end. So that's the core element. But of course, it's the same for us internally. Like, we're implementing a lot of AI solutions these days. And for some of them, I'm seeing if I spend the time now implementing, it will take me a lot of time if I need to implement something else later on. So really, I'm very conscious about sort of which solutions I'm trying out and really sort of taking into production, you could say. But it's an important element. But I really believe it's all about sort of the team's ability to navigate the landscape.
What are the typical things you look for? Like, what is that? What excites you the most?
It's a good question. I think you can never spend enough time discussing sort of team traits as a VC. It's where we're always sort of evolving our way of looking at it. I pulled forward this sort of analogy before, but we typically look for a team that has a hipster, hustler, and hacker. So you see sort of this complementary skill set of both the ability to sort of build a beautiful product and a very sort of technical, great product, but also the ability to hustle your way through and get access to talent and investors and customers. So that I always sort of come back to as well. But I think, of course, in the time we're in, there is immense competition in some of these domains. I meet teams that, you can believe yourself that you're unique and you're unique in sort of seeing this problem or finding the solution to the problem. But I tend to say that you can bet on there being at least 10 teams or 1,000 teams globally working on the same problem with perhaps not the same solution, but at least trying to solve for this particular problem. And I think in that landscape, it's all about speed. So I think the speed of execution just becomes even more important, and also speed of execution on the commercial end. And I would say now that we're seeing now early stage teams that have gotten, higher ARR in a certain amount of time than we've seen before, which is a great sign of sort of, okay, there's something exciting here. But I feel now we have an even higher bar of what does great look like in terms of commercial validation at an early stage, because you're seeing things move so fast at the global scale.
I don't have any data to back this, so it's just a question whether you've seen this. But as revenue has, for many companies have, at least in the AI space, has gone up quicker, do you also see them decrease quicker?
Yes. It can be, you see some of. Yeah, but that's always, of course, like, you don't want to invest and then after you invest, it just flattens out or goes down. So it's all about sort of, as we talked about earlier, are you defensible, are able to deliver sort of clear value to the customer at the end? I tend to enjoy when I see companies that are sort of integrated well in the workflows in companies. If you get close to the core and you're really, as you said, like, if you're spending proper time internally implementing the tool, then it's also a bigger decision to move away from it. So it's all about sort of how can sort of build this sort of defensibility into the solution. I think one example here is we invested in a company called Riff. They were previously called Data Button. So where you can build AI apps yourself very easily. And they've gone a path where I believe they will see less churn, because it's like they're going towards SMBs and enterprises where you can then build internal tools. And I think as you sort of start doing that as enterprise, it's a bigger shift. You want to move to another solution. Or you see many of the other competitors are moving more towards the individual that wants to build a beautiful website for themselves or similar. So it's just different sort of ICPs with different traits, I would say as well. But of course, something you need to be focused on as a founder in the domain.
That makes sense. It's an exciting and challenging time to be in the VC space.
It's very exciting. I feel like the way we're in, I feel like it's bigger than all the previous waves. And I think I love this video of David Bowie. There was a video of him on the BBC when the internet came. And he was questioned sort of, okay, how big can this become? And he said, like, it's unimaginable. We can't imagine how grand this will be. And his sort of predictions were so much right. You couldn't foresee in 1999 what you would have in 2025. And I think the same will be for AI as well.
That's exciting. It's just trying to keep up is interesting in itself, right? It's now I got an email today that the ChatGPT or 5.2 I think is launched. What does that entail? And it's but that's also what makes it a bit of fun, I think, because you have to be interested and you have to stay. You really have to be on your toes, not to be left behind. And then, at least for me, is whoever you follow and whoever you're connected with on LinkedIn also shapes your view on this. So I'm connected with a lot of people who likes to sort of invest and focus in this stuff. So you get also, I at least get this little bit scared. Oh, I'm behind, and then you speak to sort of, broader population, and you realize, okay, we're probably doing okay here.
That's my sort of fear in a way, is that I feel like in our world, in our circles, it's like this is so much on top of mind every single day. We see development happening firsthand. But I think within sort of enterprise and the public sector, and it doesn't necessarily go as fast. So just I think for them to keep up, I think is really important. I think also there are opportunities for startups as well, enabling implementation of AI solutions at corporates, in the public sector, etc., which I think is also really, really interesting. But I think as individuals, I'm afraid the sort of gap will be built in the next sort of 5 to 10 years when it comes to knowledge about this, because I think at some point, like I feel like today, you at least in my work, you need to be able to handle like Excel as an example. But I think with time, you need to be able to handle all these AI solutions to be a top employee. And we already see that at startups, that they really want to hire people who are able to 10x themselves leveraging AI. So that will just be a more and more important skill set amongst the workforce. And I think you also have a lot of perspectives from your job as well.
Yeah, yeah, for sure. And I was just thinking, to quote a common friend of ours, a mutual friend, Bettina from Riff, she said something I think is very right, that 2025 has been a lot of testing and learning about how to use AI. And then 26, you will start to see the ones who've actually figured out how to use this really sort of pull ahead. And because it is so powerful, it will be very interesting to see how that shapes workplaces, different like competition. And as you said, like, so we meet a lot of different companies, and some are, say, quite a few, at least the startup scale-ups are very forward-leaning in tech. The larger, it's very person dependent, right? And even if people want to, it might be very tough in a big sort of enterprise setting, because there's systems, there's security and all this. So it's, I think this is no sort of, it doesn't require a PhD to figure this out, but there will be a lot of change management that will also be super important. And I really think some of the bigger companies, especially the ones who succeed with this, are also the ones who figure out how do we get this out in the organization, the whole change management sort of plan around this.
I think always like this mindset shift as well. I think it goes for me as well in my daily life, that I feel sometimes, should I spend like an hour automating this task? It just feels like, this hurdle when you sit there on a Monday morning. If I do manage to automate this task, it will save me like 10 minutes every single week. So within sort of some weeks, I already sort of paid back my initial investment. This is always like it's a mindset shift where you need to sort of actually spend the time up front to hopefully see the value further down the line.
Yeah, No, I remember feeling the same way about Excel when I started out in consulting. So now it's just a new thing.
Yeah.
Cecilie, that was the first one. We double clicked on that, and then you had the second one, which I have already forgotten. That's pretty impressive.
Within, I think dual use has been a huge topic for 2025, and I think sort of national resilience will continue to be an important focus in the year to come.
Can you just, maybe it's also because I'll be honest, I don't understand or haven't heard that term. What is actually dual use?
So dual use is like this nice way of saying software that can be leveraged both for sort of defense purposes, but also for other purposes. So it's sort of like DefenseTech.
Oh, I like that. And you can so it's funny how everything around defense is getting rebranded these days. I also just think about it's called DefenseTech, and
I think it's dual use also because you can actually leverage it for other purposes. I think robotics is an example where you have robots that can be leveraged for many different purposes, and defense being as an example one of them. And this sort of topic has been, how I would say, so when I joined Skyfall, DefenseTech was not on the nice to-do list. It was very much a discussion around it. But now it's become more accepted that you need to also invest capital into this domain. We're looking at companies in the domain ourselves, haven't yet sort of moved forward on sort of a very clear dual use case. Of course, some of our companies can be leveraged for different purposes, but we haven't yet made an investment in the domain, but really paying attention to what's happening here across the Nordics. But yeah, we haven't yet. I haven't a clear sort of signal from our portfolio in the domain yet, but at least an area where we're spending some time within.
Yeah, it's also an interesting. I was just listening to another podcast with one of the founders of what's called Anduril, the US-based defense. They both do hardware and software, I think, right? I should maybe have done more research on this, but the founder, he was saying that it's one of those areas where just building a good product isn't enough, because there's so much about how you sell to governments and all the bureaucracy around that. So it'll be interesting to see how tech startups or the whole sort of how that must be a different skill required naturally. Yeah.
And that's been a challenge for us, like in a way, like seeing the explosiveness on the commercial end in this domain. And of course, it's a lot of hardware as well. But I think hardware is becoming more popular also in the relation to AI. It's a way to build defensibility in moats. So that's also an interesting sort of double click on dual use when it comes to hardware investments, where we're also...
That's an interesting one, because it wasn't many years ago that many startups, if they mentioned they did hardware, most of the VC investors said, no thanks. But that has changed a bit, you think, or?
It's changing, I would say, for sure. Especially as I mentioned, related to sort of your ability to build defensibility and moats in your business. Once you sort of install a hardware as an enterprise, it's a bigger shift to move away from it. And of course, also I think that's one of them. But also on the sort of data capture side, I think physical intelligence, like physical AI, you still need a ton of data to sort of build the right model. We're seeing this in the humanoid space, where you're really sort of spending now time to really sort of capture data so you can build even better physical intelligence models. Because this is quite different from an LLM, which is language-based. Like now you actually need physical data about what does it mean to sort of pull up a glass or catch an egg if you throw it at me. So that's a sort of another point where you actually need the sensor to capture data. And it will also provide you with, like if you capture data yourself, you own the data, and that also provides you with a defensibility and of course value as well. And you can leverage the data for various purposes. But that's a domain we're already spending a lot of time within and seeing some very interesting opportunities as well within. And number dual use is one. To sort of double click on the last one. Personally, I'm very interested in sort of climate tech, but especially on the energy tech side. I think climate tech has had a sort of pushback in 2025 globally. But I think within the energy tech space, we're seeing some clear problems to be solved when it comes to...
Can I just ask you, why do you think that pushback has that been because of Trump, because of war, other priorities, or?
Yeah, it's a combination, I would say. I would always say there are sort of different why now reasons. One can be technological, and I think the climate tech part has been part of technological, but most of it's been sort of regulatory driven or market driven. And regulations has sort of pulled back. You can see that within sort of which companies need to do their climate accounting. You believe 2 years back that everyone had to do it, but now you're seeing that the sort of the size of the company you have to be at to actually need to do this has increased. So it's been sort of regulatory sort of pullback in a way. But I think also the mindset has shifted, which is unfortunate. The climate crisis is still as real as before. But I think the mindset has shifted for many, which is an unfortunate situation. But I think, of course, the climate crisis is still real, and we still need to solve for it. And I think one domain we're spending a lot of time within is with the energy space, where we see that the energy mix will change, and it is changing still, with more renewables coming into the mix, which challenges grid stability. It challenges prices of power. And here we invested in a company called Starflow, working on distributed energy systems, which I think is really sort of the future, where you will avoid having to build out the grid everywhere because you will be more self-sufficient at home. But of course, here again, big challenge at home, because now you have a Nordic VC, which of course doesn't incentivize individuals to buy expensive hardware at home. But they're looking towards more international markets where you're really seeing a demand for new solutions.
Okay. But so just to summarize, it was AI, it was dual use, and which is could be both defense tech and then how to use those robots or whatever it might be, and then the last thing was clean tech. Or clean tech, was that our prediction, or was it more the fingers crossed hope, or like maybe both?
Actually, within clean tech, I think energy tech is a prediction that we'll see further big rounds in the space in the year to come. Climate tech as a whole, a bit more questionable, sort of what we'll see at a broader level. But I think energy tech for sure is one I'm very bullish around.
Cecilie, very, very interesting prediction. So in the end of 26, I will call you in, and we will see how all of it's went. I like that you're willing to put, I don't want to say put your head on the block, but it's very interesting to sort of to see where things are going. And I have a few questions as well about to get your opinion on where do you think the landscape, both investor and startup wise, is going in the Nordics. And the first one I'm curious about, in 2025, at least maybe it's not all public, but a lot has happened in the VC space. I mean, among investors, some funds have raised new rounds or new funds, sorry, and others have been quietly letting some people go, sometimes just camouflage it under that they had wanted to do something else. But it's been a tougher market for many VC funds, is my perception at least. Many reasons, I assume, higher interest rates being probably one of the main ones. How do you think this will evolve in 2026? Do you think we'll see more funds, less funds, or new types of funds? It's a big question, I know, but it will be interesting to hear your perspective on it.
No, I think it's a very valid point. It's I think continued higher interest rates, of course, affects the willingness to invest in VC, which I think, of course, is unfortunate, but that's the reality. And I think then you have to be even more convincing that VC is sort of the right investment vehicle for the particular investor. They have a lot to choose from, so I need to prove that this really delivers sort of outsized returns. And I think sort of the discussion about sort of the fund landscape, I think, always comes back to this. As an investor, you need to prove that this is the right place to put capital for the investors investing in funds. So we're always really focused on making sure we can deliver great returns to our investors. So that's been our sort of main focus all since day one. And I think that will always be the case both in up and down times. You need to prove your value as an investor in that sense. But I think, of course, VC in general is a game of outliers. We invest in outliers, and we want to invest in those that can really sort of pull off and be the 50, 100x opportunity when it comes to startups. And of course, then it also means that there will be outliers in the VC world as well, which VCs are able to be those outlier VC funds. And those outlier VC funds will be able to raise capital because you're proving that they're able to give value back to their LPs. So I would say sort of it's still capital available, but it's more sort of focused on perhaps some individuals or funds. But at the same time, what I think is great, I think we're seeing more active angel investors. I've seen in the last year more sort of angel consortium being established, which I think is super positive for the Norwegian Nordic ecosystem. Individuals sort of grouping together, wanting to do angel tickets themselves, and also provide them their knowledge into the companies.
Being an angel myself, and I've probably said this on quite a few podcasts by now, but when I was in VC, I remember thinking that we needed more angels, at least in Norway. Sweden had a lot. Denmark was probably the same thing, that they needed more. This is 6-7 years ago. I think a lot has happened in of course, even more in Sweden now, but especially in Denmark and Norway, we've seen a lot more, what can you say, qualified angels, because more people have been through sort of the startup scale-up journey, have been operators. So I'm participating in one round now, which is almost only angels. I know, speaking to the founder about that round, and it's an early round, obviously, but I think there's something super valuable in that, because all the people in there, they really want to contribute. And not to say that the VC firms don't want to contribute, but you typically have a lot of investments, whereas many of the angels might have a bit fewer and have a lot of that operational experience they want to contribute. So I'm super excited about how or where it's going with sort of all these angel.
And we typically also co-invest with angels. I think for, some founders say they take in angels first, but I would say many founders are also able to attract VC capital at an early stage. And we typically sort of tend to enjoy having angels in the rounds that can be valuable for the teams as well. So very positive to the development. And of course, being a VC myself, I of course see the value of having a professional VC as well on your cap table, both at a sort of support level and at network level, and also as a signaling element for the founders. But I think it's a great development with more angels being active, and of course many angels, they both do direct investments, but they also invest in funds. So it's a positive development on our side as well in that regards. So
as a VC, do you think about, but let's say you come into pre-seed seed and they've already done an angel round. When do you ever consider the cap table to be too crowded? Like, or if so, where's that limit? Like, I guess it also depends, but is there such a thing as too crowded cap table in that stage?
In a way, it's something we sort of look at, but I would say it's more about the dilution. Of course, if you raise angel capital and you haven't raised too much and you haven't been diluted too much, it's okay. But I think, of course, having 100 angels on your cap table can look a bit messy from the outside. Perhaps then you group it together as one vehicle, so it looks a bit more clean. But I think for me, it's more about sort of the sort of structure overall. How much does the operational team own, which is the key metric for us. And I'm sometimes sort of saddened when I see a great team that has made some perhaps bad decisions early on, perhaps raising too much capital at a too low valuation, so you're suddenly diluted sort of 40% before going out to raise VC money. And we want to see sort of more than 50% ownership at least before a Series A, and that will be difficult if you already diluted yourself 40% by year one. So it's just about having more the sort of structure around it, and making sure the operational team actually doing the work. They should be the ones owning the company in the beginning.
You probably know the news about Snu Ventures going the different ways because they want to avoid being sort of caught in the middle. And there have been talks about, some funds going even bigger, and you see more specialist funds. Now that you say you're about to raise a new fund, how have you thought about this? How do you avoid being sort of caught in the middle, or is that not a threat that you see as a VC investor?
Yes, we're still sort of keeping the same sort of strategy in a way and the same phase. So we will still continue doing pre-seed seeds, and still sort of keeping our fund quite small at least an international scale, because we want to be able to participate at the pre-seed stage and at the seed stage. What we're seeing is, and also on the other sort of very positive end, is that there are some very competitive deals happening in the Nordics. We see founders raising quite some capital at an already early stage. So what we want to be able to with our fund now is to sort of really have the capacity to participate at a sort of higher level in initial rounds, both at pre-seed and seeds. So that's also why we're raising the fund size slightly, but we'll still continue doing the same phase. So for us, I think we're still sort of early stage. We haven't yet we're not the pure seed fund where you could say sort of be caught in the middle in a way. So I'm not seeing sort of that danger for us at the moment. But of course, it's been a discussion in the market. But I would say in general, there is still need for more capital in the Norwegian ecosystem. There's still room for a lot more funds.
On that, so you're based in Norway, but you focus on the Nordics, right?
Yes.
How do you cover the other markets? So Parahelper, right? Danish founders at least. How do you get in touch with them? How do you find that deal?
Yes. So first of all, our sort of heritage is Norwegian. So meaning sort of in Norway, the ambition is to see everything. So hopefully we manage to see everything before they race around. Not always. Sometimes we have missed, but that's something we're extremely focused on, being a very sort of clear Norwegian player. And internationally, we're more opportunistic. Typically, then we work through our networks, both on the founder side and on the fund side. So Parahelp, as an example, came through a local fund in Denmark, we're speaking with regularly, and they saw an opportunity for us to invest, and then we chose to go lead, and then they chose to participate afterwards. So a lot through the network or through networks and through sort of the local players in the ecosystem. And we'll see with time, many funds, they have, established more like a satellite office in the other capitals. So we'll see over time sort of how we will do so, or have, scouts that can help out. But for now, it's very much through the network and through our connections. And I would say we spend a lot of time on a weekly basis speaking with funds internationally, both in Nordics and outside of the Nordics. That's an important part of our work as well, both to stay connected on the other local ecosystems across the Nordics, but also, of course, to speak with them about interesting things happening in our portfolio and sort of prepping them for perhaps speaking with our fund founders when they're raising next time.
Yeah. And I think that's also one of the advantages you have as a pre-seed seed fund, at least in the Nordics, right? Because many of the larger international funds will want to work with you because they want to come in a little bit later stage, perhaps. So you can become their best friend.
Yes, typically a key way for them to source is through local funds that are able to see what's happening on the ground.
Cecilie, I want to jump a little bit and ask you a little bit about talent dynamics, because one of the things we have at least seen especially in the last years, many startups hiring less or wanting to hire less or hiring differently at least. Is that something you're seeing with the companies you are working with or in the companies you meet? Like, are they hiring more or less, or are they hiring also different kinds of talent?
I think they're hiring less, I would say. I think this has been a learning since sort of the early 2000s, when the interest rate was zero and you could hire a lot of people, and capital was cheaper before. But now I do see both sort of with sort of a more sort of mindset of really sort of thinking about burn, and as well sort of the abilities to leverage AI can really sort of make it do more with less people. And 2 examples here is Rift. They raised a series round from Nordzone this summer. They were then, or earlier this year, and they were then 7 employees at that time. And really and afterwards, of course, hired a lot of talent as well, because you need people to scale to a certain extent. There were 7 people, and then Parahelp, they were 5 people when raising their Series A. So of course, we're seeing those metrics going down for sure. So looking for, but I think it's also about sort of, I think there's one metric that I feel sometimes founders doesn't necessarily use that I love myself, which is burn multiple. I would really search it online. It's how much you burn relative to how much you add of ARR on a quarterly or monthly or yearly basis. And it says something about your efficiency of spending money. And this is something I would, as a founder, sort of just have my eyes on, because that's something you will be measured against in your Series A round or similar. And you're seeing teams now achieving a lot with fewer people than before. So up towards very strong competition from other actors. When it comes to the type of talent, I think it's still it's quite, at least from my perspective, quite similar to before. I think you're still looking for the 10x engineers. That's always really, really important as a team. But here, of course, again, looking for those that can leverage new solutions to be even better. And second of all, of course, getting with, as I mentioned earlier, in terms of sort of commercial speed being more and more important. I think having the right people on the sales side is extremely important as well. And I think that's a skill set I would say Norway has been underestimated in a way. You know, you had friends being phone sellers for Telenor when I was younger. But they really learned a very good skill set and a mindset when doing that at an early age. So we're seeing more people looking for those fantastic sort of sales talents and commercial talent as well. One thing sort of worth mentioning, I met the guy, I was at this event at the Alna Gründerhub, which is on the eastern side of Oslo here earlier this week. And there was this young 70-year-old. He sort of had built a business and really sort of scaled on TikTok. That's been his main growth driver. And I think that sort of skill set amongst young talent, being able to leverage social media and find these sort of creative go-to-market strategies. This is such an important skill set as well, where I think we can learn a lot from those 70-year-olds that has grown up with TikTok from an early age.
When I start feeling older, Cecilie, I'm not even on TikTok, and then they go to market on TikTok. And I think the whole go-to-market play, the most recent episode we did was with Andreas, who's a go-to-market advisor for Atomico, amongst others. And I think as software gets easier to build, it will just be increasingly important to figure out how you get to market. And as you say, it varies between the Nordic countries, I would say, or the Scandinavian countries for sure. But we are seeing, or I have seen a lot more companies use go-to-market advisors. Trying to bring in experienced, go-to-market professionals to advise. Maybe not work there full-time, but just fractional to guide the sales team, CEO, or whatever it could be. So is that also something you're seeing, or is it just my little echo chamber of companies?
No, I think we're seeing more support coming in. For sure, these as sort of more like sparring partners. But I think again, you need the people internally doing the work. Physically or manually, like someone needs to actually operationalize it. So that I think is, even if you get advice, you still need to operationalize it with someone. So that's still as important. But I think, as you said, in general, I think product differentiation is more and more difficult in an AI world, and also you can build things so much faster, and you can expect there being 100 teams globally doing the same as you. So then commercial speed matters much more than before.
If you were to start a new company today, or in, let's say, today, early 2026, where would you look, or what would you do?
Oh, it's a good question. I meet teams every week where I feel like this idea is great, but there are many ideas. I think that's the thing being a VC. There are plenty of ideas, but it's more about execution power. But it comes to ideas and problems to be solved for, I think there are sort of tons of opportunities. So my background is within power engineering. So as mentioned in the sort of energy tech space, I feel there are so many interesting opportunities. And I think the crossover between sort of energy tech and AI could be really interesting to look at it as well. Perhaps some agents doing bidding in the power markets or similar could be really interesting. But I think, of course, AI, there are tons of opportunities in every vertical. I tend to get, sometimes I meet founders where there's something I haven't thought about myself before. And then I get a bit intrigued because I'm like, okay, this is genius. Like I haven't even seen this challenge myself, and here you are building it. So you invest in a company.
Typically because it's a vertical that you didn't even know that problem existed, or
no, it might be that it's on a deeper sort of level. I feel, at the vertical level, there are many solutions in every vertical, you could say, these days. You have AI for sales, AI for customer support, AI for booking systems. So you can do all these different verticals. But then sometimes I see things at the deeper level. It can be multimodal solutions or similar. And I get a bit intrigued about the opportunity. But again, it's easy to sort of look for technology and look for sort of areas. But I as every founder says, like you need to really sort of find the problem that is worth solving. So if I would turn around and be a founder tomorrow, I would really sort of make sure I work on a problem that is really worth solving, and focusing all my time on the problem to be solved for.
I also want to ask if you have any sort of good suggestions or about resources you go to for sort of learning new stuff. Any podcasts, books, articles, anything you would recommend? They could be to other investors or to startup founders.
Yeah, there are many podcasts to listen to. I think we're in Skyfall. We have this channel on Slack where we share podcasts every day almost. So there is enough to listen to. Those that sort of come regularly is, of course, 20 VC. I would, as a founder, also really listen to it because they both have episodes about VC, and I think it's important for founders also understand the VC dynamics when they look for funding. But also episodes on sales and go-to-market and other specific topics as well with some of the top thought leaders globally. So we'd spend time there. Acquired is just one beautiful podcast where there are more long stories about building great companies. So those are at least 2 podcasts. And you have Shifter and you have your podcast. So I'm quite broad when it comes to podcast listening. Always listen on my way to the office in the morning and on my way back, and when I make dinner. So it's
doing dinner as well. Yeah. Oh, while you're making dinner.
While making dinner.
Yes.
No, not eating it. That will be a bit sad for my boyfriend. But I think on books, there are many books you can always recommend to that has sort of stuck with me. Is one called Inspired. Marty Kagan, very, very sort of, it's just a good book to sort of, I think also if you're sort of eager to sort of learn more and just sort of get started in the sort of, get the mindset, I think that's a good one to start off with. And I do believe my friend who works for Spacemaker said this was like the book in Spacemaker that everyone had to read. Inspired. So that was one. And then I just recently read the book Build about hardware innovation, which is also great. So that's one. And then, yeah, in general, just be curious and search for information everywhere in a way, on LinkedIn, on X. I'm not spending enough time on X myself. I should be much more active there because I think especially in the AI domain, that's where news are launched the fastest.
It's the same issue. I've tried several times, but it just hasn't stuck with me. I'll give you one recommendation if you don't already know it, and that is Uncapped by Jack Altman, Sam Altman's brother. That has come up as my number 1 podcast now, and I think he started a company, sold that for I don't know, billions. Obviously, I didn't even know Sam Altman had a brother, and then he was successful. Now he's starting a VC firm, and it's very.
And they actually invested in Parahope, the one company I mentioned. So
Oh, he invested in that. Okay,
Yeah.
so you know about him, and he's. I would really recommend that.
Oh, fantastic.
Yep. So and books. One of my favorite books is, if you haven't read that, is The Hard Thing About Hard Things.
Yes, it's an
Oh, you
amazing.
know that one?
Yes,
Yeah,
oh,
listen.
I love it. It's a really, really good one. And to end it up as well, I also wanted to say, like in general, I'm very bullish on sort of the VC ecosystem. I think there's a lot to sort of discuss around the nuances and the elements, but I think we're seeing some really, really cool companies now coming out of the Nordics, scaling globally, and I think we've just seen the beginning of it. So
You said
excited for the years to come.
and I think the timing, if you can say, of when AI decided to really become popular, was really good for the venture space as well. So it gave a lot of new energy after a high interest rate. But Cecilie, with that, I just want to say thank you so much for joining. I really enjoyed talking to you.
The same here. Thank you so much for inviting me, and look forward to the coming episodes. Always cool to listen.
Thank you, Cecilie. And then we'll see in 26 how all the predictions hold up.
Yes, keep me accountable.